Hi everyone. Detective Lefebre speaks. It began with what should have been a mundane task, a routine audit. The logistics company was on the cusp of a significant merger with a larger firm, and as part of the due diligence process, external auditors were brought in to comb through the company's financial records. For a mid-sized operation handling millions in annual revenue, the expectation was that they might find minor errors, duplicate payments, rounding issues, or perhaps outdated vendor accounts. But this audit uncovered something far more sinister. The discrepancies were subtle at first. Unexplained withdrawals labeled as miscellaneous expenses and duplicate payments to vendors. These entries didn't raise immediate red flags, as such irregularities are often chalked up to human error or system glitches. However, the auditors began to notice patterns. One vendor, Global Shippers LLC, appeared to have been paid twice for the same invoice. Digging deeper, they discovered more instances of identical amounts being sent to similarly named vendors, payments that didn't align with shipping logs or service records. The auditors escalated their concerns to the company's CFO, who was equally baffled. Cross-referencing these payments with the firm's records showed that the anomalies stretched back years. What initially looked like clerical errors snowballed into a stunning discovery. Over $3 million had been siphoned off in small, seemingly innocuous increments over 5 years. These weren't mistakes. They were deliberate. The company's CEO, a man known for his hands-on approach and loyalty to his employees, was devastated. When I met him, he was pacing his office, visibly distressed. "This is a family business," he said. "Everyone here has been with us for years. I trust them like I trust my own family. How could someone betray us like this?" His shock and disbelief mirrored what I've often seen in cases of internal fraud, where trust, left unchecked, becomes a blind spot. My task was clear: identify the thief, uncover how they'd done it, and ensure justice was served. But the scale and duration of the theft suggested I was dealing with someone meticulous, calculated, and deeply embedded within the organization. As I began my investigation, one name kept surfacing in connection with the anomalies: Susan Palmer. Susan was the company's senior accountant, a role she had held for over a decade. Her responsibilities included payroll, vendor payments, and reconciling accounts. Essentially, she was the gatekeeper for the company's finances. If there was anyone in the organization who had both the knowledge and the access to pull off such a scheme, it was her. Susan had built a sterling reputation over the years. Her colleagues described her as meticulous, reliable, and hardworking. "She's the glue that holds the department together," one coworker told me. "If there's a problem, Susan's the first to solve it." Her supervisor echoed the sentiment, praising her for taking on extra work without complaint and always meeting deadlines. Her personal life appeared equally unremarkable. Susan lived alone in a modest home in a quiet neighborhood. She drove an older sedan, wore understated clothes, and rarely took time off work. She was single, with no children, and her coworkers admitted they knew little about her personal life beyond surface-level interactions. "She's private, but that's just who she is," one employee said. "She's always been dependable." On the surface, Susan seemed like the least likely suspect. But as I've learned in cases like this, the most effective criminals are often those who blend in seamlessly. Susan's image of reliability and modesty made her the perfect cover for someone who didn't want to attract attention. Still, suspicion wasn't enough. To build a case, I needed solid evidence. The first step in the investigation was to analyze the company's financial records in detail, focusing on the discrepancies flagged by the auditors. Patterns quickly began to emerge. The fraudulent transactions shared striking similarities. They were all routed to vendors whose names closely resembled legitimate suppliers. For instance, Global Shipping Company, a real vendor frequently used by the company, had a fake counterpart called Global Shippers LLC. Another example was Atlantic Freight Services, which was subtly altered to Atlantic Freight Solutions. The differences were small, just enough to avoid detection during routine checks. These fake vendors were tied to separate bank accounts, all of which were eventually traced back to Susan. What was remarkable was how methodical she had been. She started small, transferring amounts as low as $500 to avoid raising suspicion. Over time, as her confidence grew, the amounts increased steadily. By the final year of the scheme, She was diverting tens of thousands of dollars in single transactions. What stood out was the simplicity of her operation. Susan exploited the trust her colleagues placed in her and the lack of robust oversight in the company's financial systems. She used legitimate-looking invoices, complete with fabricated service details, to justify the payments. By keeping the amounts just under the radar and spreading the fraud across multiple accounts, she had managed to stay hidden for years. However, even the most careful criminals make mistakes. Susan had reused certain bank account numbers across multiple fake vendors. This oversight allowed us to cross-reference the accounts and identify a clear pattern. Each of these accounts funneled money directly to Susan, either through personal accounts or offshore entities. Her operation was intricate, but not flawless. Once the web of fake vendors was mapped out, the breadth of her deception became undeniable. Susan Palmer, the quiet, dependable accountant, had orchestrated one of the most brazen embezzlement schemes I'd encountered. Once it was clear that Susan Palmer had been siphoning funds, my team and I shifted focus to tracking where the stolen money went. Following the money trail required meticulous work, as Susan had used several techniques to obscure her activities. She moved funds through layers of accounts, leveraging her knowledge of banking systems to delay detection. The fake vendor payments were the starting point. Each transaction, though appearing legitimate at first glance, led to a bank account opened in the name of one of Susan's fabricated entities. These accounts were strategically located in different states, making it harder for any single institution to notice unusual patterns. Susan transferred small amounts at irregular intervals, a common tactic to avoid triggering automatic fraud alerts. However, her offshore activities were more sophisticated. Approximately $1.8 million of the $3 million stolen had been funneled into an account registered in the Cayman Islands under the name of a shell company, Blue Tide Holdings. Offshore accounts are notoriously difficult to trace, but the digital footprint she left while accessing these accounts provided critical evidence. Records showed she logged into the offshore account during work hours from her office computer, a bold but careless mistake. To launder the remaining funds, Susan used prepaid debit cards and wire transfers, often splitting transactions across multiple accounts. A portion of the stolen money was funneled back into her personal accounts in small increments. This allowed her to access the funds discreetly while maintaining the illusion of her modest lifestyle. Each transfer painted a clearer picture of her operation. Susan had studied financial regulations and exploited loopholes to create a labyrinth of transactions designed to frustrate investigators. But her meticulous approach ultimately worked against her. By documenting everything so precisely, she left behind a roadmap that exposed the entire scheme. On the surface, Susan Palmer was an ordinary accountant. But as the financial trail unfolded, it became clear that her modest facade was a deliberate disguise. Digging into her personal life revealed a stark contrast between how she presented herself at work and how she lived outside of it. One of the most striking discoveries was her vacation home in the Florida Keys. Purchased through Blue Tide Holdings, the shell company tied to her Cayman Islands account, the property was $1 million beachfront home. Neighbors described Susan as a seasonal visitor who kept a low profile. She came down a few times a year, one neighbor said. But when she was here, she lived well, hosting dinners, taking guests out on her boat, and spending her evenings at high-end restaurants. Further investigation revealed she had taken multiple international trips to luxury destinations, including Paris, Santorini, and the Maldives. These trips were carefully timed to coincide with long weekends or slow periods at work, ensuring no one at the office would notice her absence. Susan booked her travel through specialized agencies that catered to affluent clients, paying with funds transferred from her offshore account. Her personal spending was equally revealing. She frequented boutique shops and high-end jewelry stores, often purchasing items under assumed names. At home, however, Susan maintained the appearance of frugality. She drove a 10-year-old sedan, dressed plainly, and never flaunted her wealth. This dual existence, the modest accountant by day and the secret socialite by night, was key to how she avoided suspicion for so long. Despite her attempts to separate her two lives, the financial evidence tied everything together. Every purchase, every trip, and every lavish expense traced back to the stolen funds. Susan had built her life on deception, and it was all beginning to unravel. With the financial trail and evidence of Susan's double life in hand, the next step was to build an airtight case. Embezzlement cases require not just evidence of theft, but a clear demonstration of intent. We needed to prove that Susan's actions were deliberate and systematic, leaving no room for her to argue that it was a misunderstanding or an accounting error. The digital evidence from her work computer was critical. Despite her efforts to delete incriminating files, forensic analysis recovered fragments of emails and spreadsheets that detailed her scheme. One particularly damning file, innocuously titled Budget Planning, contained a list of fake vendor accounts, payment schedules, and corresponding amounts. This spreadsheet was essentially a playbook for her theft. Emails provided further insight into her mindset. One draft email, never sent but saved in her drafts folder, outlined her contingency plan in case her fraud was discovered. She had written instructions for transferring remaining funds to a secondary offshore account and expressed concerns about avoiding legal consequences. This document showed premeditation and a clear understanding of the risks she was taking. Surveillance footage from her visits to local banks added another layer of evidence. On multiple occasions, Susan was captured depositing checks into the fake vendor accounts or withdrawing funds from her offshore accounts. These videos, combined with the forensic evidence, painted a comprehensive picture of her activities. To strengthen the case, I also gathered testimony from her colleagues. While most of them were initially in disbelief, they acknowledged that Susan had complete control over the company's financial processes. This level of access, combined with the lack of oversight, gave her the perfect opportunity to commit the fraud. By the time we were ready to confront Susan, the evidence was overwhelming. The financial records, digital footprint, surveillance footage, and witness statements formed an ironclad case. Susan Palmer's carefully constructed facade was about to come crashing down. The evidence against Susan Palmer was airtight. It was time to confront her, but this needed to be handled delicately. Confronting white-collar criminals requires a strategic approach. They often rely on charm, denial, and misdirection. However, with the mountain of evidence we had compiled, her options for deflection were limited. It was a typical weekday when I arrived at the logistics company's office. Susan was at her desk, calmly typing away, completely unaware that her scheme was on the verge of collapse. I asked her to step into a conference room, accompanied by two investigators from the Financial Crimes Unit. As she sat across from me, her demeanor remained steady. Her confidence was remarkable. Perhaps she believed her double life was still well hidden. I started with general questions about her responsibilities in the accounting department, her role in managing vendor payments, approving invoices, and reconciling accounts. Susan answered fluently, maintaining her calm and professional tone. She even smiled occasionally, seemingly at ease. Then I presented the first piece of evidence, a forged invoice from Global Shippers LLC, one of her fake vendors. Susan's expression didn't waver. "I don't recall that specific invoice," she said, brushing it off as a potential error. But when I followed up with the spreadsheet recovered from her computer, the one detailing the fake vendors and payment schedules, her composure began to crack. She shifted in her seat, her voice becoming less steady. "I'm not sure how that ended up on my computer," she said, attempting to downplay its significance. But when I laid out the bank records showing direct transfers from those accounts to her personal offshore holdings, her silence spoke volumes. Finally, I presented surveillance footage of her making deposits into the fake vendor accounts. Her confidence evaporated. Susan's hands trembled as she reached for a glass of water. At that moment, she realized the game was up. It took hours of questioning, but Susan eventually broke down. Tears streamed down her face as she admitted to the fraud. "It wasn't supposed to be like this," she said, her voice barely above a whisper. She explained how the scheme had started small, almost as an act of desperation. Years earlier, Susan had co-signed a loan for her younger sister, who was battling a life-threatening illness. When her sister defaulted, Susan was left with mounting debt she couldn't manage on her modest salary. "I just needed a little extra to get by," she said. "At first, it was only a few $100s. I thought no one would notice." But once Susan realized how easy it was to manipulate the accounting system, the theft escalated. She described the rush of transferring larger and larger amounts, each time convincing herself it was harmless. "It's just numbers," she said. "They have so much money. What's a few thousand here and there?" Her justification shifted when the conversation turned to her luxury spending. Susan admitted that as her debts were paid off, her motivations changed. She began using the stolen money to fund lavish vacations, purchase her vacation home in the Florida Keys, and maintain her secret life of indulgence. "I felt like I deserved it," she confessed. "After years of working hard and never being noticed, it felt like a reward." Despite her tears, there was a chilling lack of remorse for the harm she had caused. Susan seemed more upset about being caught than about betraying her employer's trust. When asked if she ever considered stopping, she shook her head. "Once I started, I didn't know how to stop. It just became part of my life." Susan's confession and the mountain of evidence against her made the case relatively straightforward in court, but her trial still drew significant attention. The sheer audacity of her crime. A trusted senior accountant embezzling $3 million over 5 years captivated the public. The prosecution meticulously laid out the evidence, walking the jury through the timeline of Susan's scheme. They presented the forged invoices, the fake vendor accounts, and the bank records that traced every stolen dollar back to her. They also highlighted her luxurious lifestyle, showcasing photos of her vacation home, expensive jewelry, and international trips, all paid for with embezzled funds. One of the most damning pieces of evidence was the spreadsheet Susan had created to track her fraud. The prosecution framed it as a blueprint for betrayal, a document that revealed not only her actions but also her intent to sustain the scheme indefinitely. Susan's defense team attempted to humanize her, arguing that she had been driven to desperation by her sister's illness and financial struggles. They portrayed her as someone who had initially acted out of necessity but became trapped in a cycle she couldn't escape. While this narrative elicited some sympathy, it was overshadowed by the calculated nature of her crimes. Witnesses from the company, including the CEO and several of Susan's colleagues, testified about the profound impact of her betrayal. The CEO, visibly emotional on the stand, described how the theft had jeopardized the company's merger and shaken the trust he had in his employees. "We built this company on the idea of loyalty and integrity," he said. Susan destroyed that. The jury deliberated for less than a day before delivering their verdict, guilty on all counts. Susan Palmer was convicted of embezzlement, wire fraud, and money laundering. The judge, in his sentencing remarks, emphasized the breach of trust and the long-term damage her actions had caused. "This was not a momentary lapse in judgment," he said. "It was a deliberate, sustained effort to enrich yourself at the expense of those who trusted you." Susan Palmer's sentencing marked the culmination of a long and painstaking investigation. She was sentenced to 10 years in federal prison, with no possibility of parole for the first 7 years. In addition to the prison term, she was ordered to pay restitution, though recovering the full $3 million was unlikely. Her assets, including the Florida Keys vacation home, offshore accounts, and luxury purchases, were seized and liquidated. These funds helped offset the company's losses but couldn't fully repair the financial damage. The judge made it clear that Susan's betrayal of trust was a significant aggravating factor in her sentencing, stating, "Your actions harmed not only your employer but the livelihoods of countless employees who depended on that company." The logistics firm faced significant challenges in the aftermath of the embezzlement. The missing funds strained cash flow during the critical merger process, and the emotional toll on employees was palpable. To rebuild trust, the CEO implemented sweeping changes, dual approval for all payments, mandatory external audits, and tighter access controls on financial accounts. While these measures restored confidence in the company's systems, they also added complexity and bureaucracy. The culture of camaraderie that had once defined the workplace was replaced with an air of caution, a lasting reminder of the betrayal. Susan's case became a cautionary tale in the business world, highlighting the dangers of unchecked trust and the need for robust financial oversight. The logistics firm learned this lesson the hard way, but their experience served as a wake-up call for other companies. For me, the case reinforced a vital truth. Even the most unassuming individuals can commit extraordinary crimes when given the opportunity and motive. Fraud thrives on complacency, and every system, no matter how tight-knit or trusting, needs accountability. In the end, Susan Palmer's meticulous scheme was undone by her own arrogance and the assumption that no one would ever look too closely. If you like the story and want to watch more stories by Detective Lefebre, please subscribe to my channel and leave a comment below. Remember, the truth is in details.